Is Sean McCormick. I am an associate in Thompson, Hine's Insurance Recovery and Business Litigation Practices. I work out of the Dayton, Ohio office, and I'd like to welcome everyone to today's webinar. This is the second in a series of webinars targeted at issues that businesses face operating in a COVID-19 world that we've become, unfortunately, all too familiar with. And today's presentation is focusing on insurance considerations arising out of COVID-19. The goal of this webinar is to provide you all on this call today with a high-level view of the insurance coverage questions and issues associated with the coronavirus pandemic, at least those that we've seen to date. Our goal is not to advocate for a particular position, but rather to simply provide you with an overview of issues that we are seeing and give you some things to watch for in the future. Before I move on, I want to let everyone know that our next scheduled Thompson Hine webinar is May 12th, dealing with contractual force majeure issues. The firm is also planning additional webinars as topics arise. To sign up for those webinars or any others, please visit our COVID-19 task force page on the firm's website. Before we get into the substance of today's webinar, a few housekeeping items for everyone. Today's program is being recorded, and we will send a link to all attendees within 48 hours of today's presentation. If you have any questions during the webinar, feel free to use the question box located in the control panel on the right side of your screen to submit those questions. We will answer as many of the questions as we can at the end of the presentation, time permitting, and we will continue to remain online for a short period of time. We will also be offering CLE credit for today's webinar. For those of you that are interested, please be sure to fill out and return the webinar affirmation form that can be found in the handout section of the control panel located on the right-hand side of your screen. The form provides instructions as to where to send the completed form, and you will need a tracking code, which I will announce at the end of today's program. In the handout panel, you will also find, and you can download a copy of the PowerPoint slides and the bios of today's speakers. Again, thank you for joining. Thank you for your interest. And if you have questions as we go along, please use the questions box. Joining me today, sorry, audio issues. I apologize. Also joining me today is Chris Bechhold, who's a insurance recovery specialist out of our Cincinnati office. Chris has over 40 years of experience dealing with insurance coverage and litigation. An overview of the presentation. We are first going to I will touch on first-party insurance issues. After I finish discussing those issues, and when I say first-party insurance issues, what I'm talking about there are insured versus insurer, so policyholder issues directly with their carriers, such as business interruption insurance, which we will talk about. After that, Chris will discuss third-party insurance issues involving either commercial general liability policies, D&O insurance, and a few others. Once Chris is finished with that portion, I will briefly touch on some of the proposed legislation that's being discussed regarding coverage of COVID-19 related claims. And then at the end, Chris is going to give a brief overview of pending COVID-19 insurance litigation, and then hopefully there'll be some time for questions at the end. So let's talk first about first-party insurance issues. With the travel restrictions and business closings, interrupted production and supply, the COVID-19 pandemic has had a far-reaching impact that is sure to continue. The question that many businesses are asking or they will be asking, is do we have insurance for this? Do we have insurance for the losses we've sustained as a result of COVID-19? And the lawyerly answer, and what we're seeing is the answer to that question is likely it depends. And more specifically, I believe it depends on really three things. The type of insurance that a business has purchased. Secondly, the language of the particular policies at issue that business holds. And thirdly, the particular circumstances surrounding that particular business's losses. I believe that those are really the three key questions with respect to insurance coverage for COVID-19. And I want to make an initial disclaimer that as with any insurance policy interpretation question, whether any coverage exists for coronavirus-related claims must be determined on a policy-by-policy basis. It always comes down to the particular language of the policy. So there are no broad strokes here, but we will discuss what policies may provide coverage depending on the particular circumstances. And the first one we're going to discuss is a coverage that's found in most commercial property policies, and that's what's commonly known as business interruption coverage. And business interruption coverage covers lost income sustained by the policyholder, the insured, as a result of a covered cause of loss. And I want to touch on that issue right off the bat. Most businesses and most policies are going to be called what are all risk policies. And those cover all risks of damage unless expressly excluded under those policies. And so, you know, that is a threshold issue. But the reason I bring it up is that there are still some policies that are written that specifically define what's a covered cause of loss. And those policies are only going to cover expressly defined losses. For example, a fire or a lightning situation or windstorms, etc. So if you have a policy that is not an all-risk policy, or a business has a policy that's not an all-risk policy, that is limited to only certain types of losses, obviously that's going to be a threshold question that's going to have to be answered. Presuming it is an all-risk policy, business interruption insurance is typically triggered as a result of direct physical loss or damage to insured property. And that phrase, that is policy language, direct physical loss or damage. And that's really the language that we're seeing is going to be argued over most intensively between insurance carriers and insureds. And the real question that is arising and that's going to have to be addressed by the courts is what does that language mean in the COVID-19 context? This will be the key battleground in coverage disputes between insurers and policyholders. And so let's talk a little bit about that. We're seeing two schools of thoughts emerging with respect to that question. Insurers are interpreting this language narrowly. And they're arguing that coverage is not triggered in the absence of physical injury to tangible property. And that could be real property, it could be business personal property, it could be stock. That's all defined in the policy. But what insurers are, the way they read that language is that you have to have tangible loss. So the best example of that is a fire loss. It destroys something tangibly, you can see it, you can smell it. However, policyholders and their attorneys are arguing and will argue that language is actually much broader than that, that it covers both direct physical loss or damage in the disjunctive, and that coverage is triggered whenever insured property cannot be used as it is intended or is unsafe. So there have been dozens of lawsuits that have already been filed across the country by policyholders on this basis. And we're literally seeing new cases filed daily across the country. And the argument is that the presence of COVID-19 or the inability to use the business property as intended as a result of COVID-19 constitutes a physical loss. And, there's obviously, this is an entirely new frontier in the COVID-19 context, but older case law in other circumstances seems to support both sides. One example of a case that might be favorable to a policyholder is there was a business that smelled, had an odor because gasoline was leaking into the basement of the business premises. The business was unsafe as a result of these toxic fumes and smelled so bad that the owner of that premises had to move out. They filed a claim for business interruption insurance, and the insurer denied coverage, stating that there was no physical damage to the premises. The court ultimately, in the litigation that followed, disagreed, finding coverage in that situation, stating essentially that because the property couldn't be used for its intended purpose, it was temporarily unfit for occupancy, and that was enough. Under the direct physical loss or damage language of the policy, that was enough for coverage. But there are also examples of cases that have come down on the side of the insurers. One example is there was mold present in an insured's property's ventilation system that rendered the property unusable. Similar type of situation, slightly different, but an unusable property without any kind of tangible harm. The insured sought coverage for the cleaning and the moving expenses and lost income as a result of having to deal with the mold issue. And the court found in that case that since there was no structural or tangible damage to the insured property, there was no physical loss under the policy, and there was no coverage. So, and those are just two of many examples that I could give, some of which support the insurance carriers, some of which support policyholders. Ultimately, whether COVID-19 causes direct physical loss or damage to an insured's property is going to be a fact-specific inquiry. And there are going to be a number of questions in each particular circumstance that a court is going to have to answer, and that the parties in any kind of litigation are going to have to answer in order to get to the bottom of that issue. Some of those questions include, but aren't limited to, did any employees actually contract the virus on premises? Was it present? Was a business closed purely as a prophylactic measure to prevent the spread of the disease? And if COVID-19 was present, how long was it present? Did it recur? And did the insurer do everything it could to mitigate its damages under the circumstances? Those are just a few of the myriad of questions that'll be asked in those situations. We expect that since the science around COVID-19 is still very uncertain, that you're going to see expert witness battles are on the question of whether this virus causes physical loss or damage to property. So that is really, I think, sort of the key battleground with respect to these lawsuits for business interruption and civil authority coverage that we're seeing filed across the country. A few exclusions to be mindful of in these policies. Some insurers may try to argue that a pollution exclusion applies to exclude coverage. That's sort of a square peg in a round hole situation. Typically those exclusions apply for environmental cleanups. They wouldn't apply in this instance, but as I said before, the policy language controls, so you'd have to look at the particular language of the policy. The more likely exclusion is a virus or communicable disease exclusion that would exclude coverage for, almost exactly this type of situation. But those aren't always present. So again, you'd have to read the policy to determine whether or not there was such an exclusion. And even if there is such an exclusion, as we'll talk about later in the program, those exclusions could be nullified by some legislation that's being proposed in multiple states across the country. So there's a lot that's still up in the air with respect to the playing field when it comes to COVID-19 claims. I want to move now to contingent business interruption just briefly. Contingent business interruption insurance is a coverage that's typically triggered by damage to a policyholder's suppliers or trade partners, customers, not to the policyholder itself. These policies typically do not require any physical damage to the insured's property. What they would require is physical damage to the particular supplier or trade partner's property, and that direct physical loss or damage requirement must still be met under these coverages. Otherwise, the analysis, I think, would track very closely with the conversation that we just had. One thing to point out with contingent business interruption insurance is the term supplier is generally broad. It's typically not limited to only manufacturers or distributors or somebody that a policyholder would have a supply contract with, and it can be as broad to include an airline or a subway that would bring customers to an insured's business. So that term is generally not confined narrowly. Civil authority coverage is another one that we're seeing in a lot of these lawsuits that are filed, the argument that it's triggered. Civil authority insurance may cover an insured's losses associated with the government shutdown, which we've seen a lot of that, and or restricted access to an insured's business. So yes, we've seen some of that. But I would caution everyone that it's a pretty high standard to trigger civil authority coverage. If you look at the case law, most of the case law that you'll see requires that multiple prongs be met in order to trigger coverage under a civil authority policy. The courts are typically going to examine first, was the damage because of an action of a civil authority? Okay, so did the government actually take an action that caused damage? Second, that action prohibited access to the insured's premises. So was access actually prohibited? Thirdly, the action of the government, the civil authority, prohibiting access to that premises is caused by direct physical loss or damage to the property within a specified distance of the insured's property. And a good example of that, I think, is, again, if we go back to our fire example, if you have a large fire in a particular area of, say, a municipal in a city, for example, and the government decides to shut down every business within a 2-3 mile radius. If your business fell within that radius, you weren't allowed to access your premises, but your premises doesn't actually suffer tangible physical harm. That could be kind of the more blatant situation where the civil authority coverage might be triggered. When it comes to COVID-19, obviously you can recognize that there are going to be issues proving that for the policyholder. And the last prong is one we've discussed already, which is fourth, that the loss or damage to the property is caused by or resulted from a covered cause of loss. And again, that only becomes an issue if you don't have an all-risk policy. I would note also that the language of these policies vary very widely, and I mean the civil authority coverages. So again, the devil's in the details, so to speak, and the policies have to be reviewed. Briefly, I want to cover a few more that might be at issue with respect to COVID-19. Some environmental pollution policies may provide coverage for costs associated with disinfecting property from a pollution condition. Again, that's a term. Pollution condition is a term that'll likely be defined under those policies, and it may arguably, depending on the policy language, include COVID-19. But again, these policies may also exclude coverage for communicable diseases or viruses. So, those policies would also, as with the rest of them, need to be reviewed to see if there was an argument that could be made for coverage. Event cancellation insurance, we've seen some large losses associated with event cancellation. In fact, just recently, I think Wimbledon in England had to cancel that major tennis tournament, and is cashing in on a huge event cancellation policy. This is specialized insurance, often associated with large trade shows or concerts or sporting events, and it may provide coverage for losses associated with these kinds of cancellations. These policies may not respond to voluntary cancellations, so again, that would just depend on the language of the policy. Some of the policies would actually require the physical or legal inability to proceed. So you just, for example, the state of Ohio or the state of New York says you can't have this event. Those policies could also contain communicable disease exclusions. So again, they have to be read thoroughly. And as in any contractual situation, the policyholder is going to have an obligation to mitigate those damages to the extent that they're able to do so. Lastly, there may be some industry-specific policies that would respond to COVID-19 that would provide at least some sublimits of coverage for communicable disease events or pandemics. We've seen very few of these so far, but that doesn't mean they don't exist. They are out there. But these policies are likely going to be the exception, not the rule. A few takeaways from first-party insurance. Any business that has commercial property insurance, event cancellation insurance, pollution insurance, really any business that has COVID-19 related losses needs to be reviewing their policies and trying to determine whether or not claims are covered. They should be considering filing a claim to the extent that they think there may be one. And especially, I think, in states that are considering retroactive legislation. Also, I think it's just generally true that policyholders should be tracking notice and suit filing requirements under policies to make sure they're complying with any deadlines or time limitations. And of course, any business that thinks they have these losses should be setting up systems to make sure that they're documented so that if and when the time comes that they need to prove those up, they're already organized. And now I'm going to switch over to my colleague, Chris Bechhold, who's going to talk a little bit about third-party insurance issues.
Thank you, Sean. The good news about third-party liability insurance, in contrast to the first-party insurance that Sean has been talking about, is that to date, we are not seeing a abundance of denials of coverage. As of last Thursday, based upon the statistics that we had reviewed, it appeared that somewhere in the neighborhood of 85% of the first-party business interruption and extra expense claims that had been submitted for reimbursement were being denied by the insurers for alleged failure to specify property damage or for not having adequate documentation with respect to civil authority. In contrast, as I indicated, with respect to third-party insurance, to date, while there have been a limited number of third-party lawsuits filed, the ones that we have seen have all been accepted under a reservation of rights. And so what we're going to talk about briefly here is those policies and what you can reasonably expect from the insurers and what you want to do to make sure that your interests are protected. I'd like to start off by talking about directors and officers insurance, because that seems to be one of the hot button insurance policies for third-party liability, along with commercial general liability at this point in time. To date, we've seen a couple of class actions that have been filed, one against a biotech company for falsely claiming in TV interviews that it had developed a vaccine for COVID-19. The second one, a class action against a cruise line for falsely contending that it would produce strong financial results, notwithstanding COVID-19 outbreak throughout the United States. We are expecting a limited number of security class action lawsuits for a couple of reasons. First, as many of you I'm sure aware, on May 4th, the SEC issued a press release reminding companies to inform investors of COVID-19 risks. And as a result of that reminder, most companies, immediately issued such information for investors. And so the ones that we reviewed so far have been very comprehensive and probably, would withstand any SEC investigation. The second thing that we have noticed is that everybody's stock went down as a result of the COVID-19 pandemic. So in terms of getting an SEC class action because of a drop in a particular company's stock, that's probably going to be a more difficult claim to bring. The few things that you need to remember with respect to D&O insurance, and this applies to all D&O claims, but specifically now that we've got the situation with respect to COVID-19, is that these are claims-made policies, and as such, you need to check on your policy with respect to the definition of claim. Most of the current policies that have been issued have a very broad definition of what constitutes a claim. Tolling agreements constitute a claim. SEC investigations that are in the preliminary stage can constitute a claim. And you don't want to find yourself in a situation where you're being told by the insurance company that you submitted your claim untimely under the reporting requirements in the D&O policy. In addition, most D&O policies also have a provision that addresses a notice of a potential claim. I always recommend to Thompson Hine clients that if you have a potential claim that hasn't fully developed yet, to put your insurer on notice. That preserves the timeliness of the claim and ensures that you won't be faced with a late notice type situation somewhere down the road. You only need to provide the information that is available to you when you provide notice of the potential claim, and then you can update it as the claim, potentially goes forward down the road. D&O policies have a very broad definition of what constitutes wrongful conduct. In the lawsuits that we've seen so far involving COVID-19, all of them have fallen within the definition of wrongful conduct, and we've not seen any reservation of rights letters where an insured is contending that the alleged conduct at issue didn't fall within the definition of the policy for wrongful conduct. Unlike first-party policies and commercial general liability policies, you typically will not see a virus or bacteria exclusion on a D&O policy, nor will you see a pandemic exclusion. However, as Sean correctly pointed out, you want to make sure that you review your D&O policy to make sure it doesn't have a manuscript endorsement on it or some unusual provision in it that would preclude you from having coverage for a COVID-19 D&O claim. Other exclusions that we have seen in some of the D&O reservation of rights letters include bodily injury exclusion, property damage exclusion, and the pollution exclusion. As far as we can tell at this point in time, they're kind of boilerplate exclusions that the insurers have put in the policies, and we don't think that as these claims go forward that there's going to be any real basis for using those exclusions to deny coverage, at the end of the claim. The final thing I'd like to point out about with respect to D&O coverage is that for those of you that are familiar with that type of coverage, it has a number of different types of coverage in a D&O policy. There's called the Side A coverage, which is coverage that can be accessed directly by an officer or director. There is the Side B coverage that can be accessed by the company when it indemnifies an officer and insured and then gets reimbursed by the insurance company. And then there's the Side C coverage, which is available to the company if the company gets sued directly for its own alleged misconduct. There also, however, is what's known as the Side A coverage. And the Side A coverage is a situation where either the applicable limits of liability in the policy are exhausted and the named insured company has purchased additional coverage that's available only to the officers and directors if the policy is exhausted, or if under the Side B coverage, the company is unable to indemnify the officer or director for the defense costs or settlement or judgment that is assessed against the officer and director. The Side A coverage is only accessible by the directors and officers, and it's a limit that's only available to them. So as I'm sure you've seen over the last few days, there have been a number of companies that have filed for bankruptcy or for another reason have been unable to go forward and are in an insolvency type situation. So they would not have the ability under their D&O policy, under the Side B coverage, to indemnify an officer or director. If they had the Side A coverage, those companies would be able to, officer directors could directly access that Side A coverage in the event of a lawsuit. The second type of policy I'd like to discuss briefly is about the employer's liability policies. We are seeing claims being brought that are outside of the traditional workers' compensation scenario. The claims that we're seeing, the first ones that we saw at Thompson Hine involve situations where family members were contending that an employee brought home COVID-19 from the workplace and that they became infected as a result of exposure from an employee who contracted it in a work type scenario. Your employer's liability policy should cover that type of claim. The other type of claims that we're seeing are what are known as intentional torts. And intentional torts are going to be a big issue, I think, with respect to employer liability in those jurisdictions that recognize employer intentional torts. You need to know exactly what the law provides for in your particular jurisdiction. By way of example, in Ohio, for an employer intentional tort, as the law currently stands, you need to have an intentional act with an intended consequence to injure the employee. And you cannot have insurance for that type of a claim that's against public policy, as well as the expected and intended exclusion in the employer's liability policies. However, there are policies that are issued in Ohio that will provide for defense costs. So if you find yourself in a situation where you have an intentional tort and you have employer's liability, you'll want to check your policy to see whether or not you've got coverage for it. And if you do have coverage, what the extent of the coverage or scope of coverage is. There are other jurisdictions where you don't need to have intent to injure. You can simply have something that's a lesser standard. And in some of those jurisdictions, it's not against public policy to procure insurance for those type of claims. So as you go forward with COVID-19, you're going to want to check if you get employee lawsuits that are outside workers' compensation to see if your employer's liability will provide you with that type of coverage. Just to give you some further examples of what we're seeing out there in the country with respect to those type of claims, we're seeing intentional tort claims being brought for employees who are forced to work in allegedly knowing and unsafe conditions. We're seeing intentional tort claims being brought with respect to employees who are forced to work with known inadequate personal protection equipment. We're also seeing employer liability claims being brought with respect to individuals who contend that they were terminated from their employer, from their employment, for staying home to attend to a family member who was ill with COVID-19. And we've also seen employer liability claims being brought for individuals who were speaking out about alleged unsafe working conditions relating to COVID-19. Many of you may have read in the press that some of those claims involve some big name companies such as Amazon and Walmart. So if you find yourself with a situation involving an employer liability with COVID-19, review with your attorney or exactly what your options are and what your scope of coverage is with respect to the particular policy that you've got. As I indicated with respect to employer's liability, most employee liability claims for individuals who have been harmed on the job will probably fall under the workers' compensation scheme in your particular jurisdiction. The key action will be for the employee to show proximate causation. That's going to be the threshold issue. Can the employee establish that he or she contracted COVID-19 while at work as opposed to outside in the community? We've not seen a lot of workers' compensation claims to date. We know that, however, that they're coming because you can read in the press about all the individuals who are working in the high-risk industries such as healthcare providers, transportation personnel, hospitality personnel, and similar businesses that include daily close contact with the public. Our feeling is that those type of individuals, should be able to establish entitlement to workers' compensation, given the positions that they were working in, and the fact that the virus is so well spread out and in those particular areas. We have seen, and I'm sure you've read about it, a lot of activity with respect to commercial general liability policies. This would be your primary coverage for CGL, your umbrella, and your excess. Some of the first lawsuits involving COVID-19 that were filed involved the cruise lines. And you probably read about it in the newspaper involving the Princess and Norwegian lines. Those were the first class actions to be filed, and the claims for relief set forth in those policies involved negligent failure to warn of known dangers, negligent failure to continue to operate after it became aware of crew and passengers being sick with COVID-19, negligent failure to adequately staff the ship with proper medical personnel, negligent failure to have proper and adequate screening protocols in place on the ships, and negligent failure to properly prepare for a pandemic. These claims all allege, bodily injury and property damage, which would be covered by their commercial general liability policy in the absence of a pandemic or virus exclusion in them. And they've also alleged false imprisonment for the quarantine on the ship and their inability to get off the ship, and that would be covered by the personal injury section of the commercial general liability, once again in the absence of any applicable exclusion for viruses or pandemic. In addition to the cruise ships, we have now seen over the last really kind of 2 weeks quite a few lawsuits being filed against nursing homes. We've seen lawsuits filed by pilot associations with respect to their situation and coming in contact with COVID-19 passengers, although I think that a lot of those will probably be covered by workers' compensation unless they're not covered by workers' compensation, and since they're professionals, they're probably not. We've also seen lawsuits being brought against hotels, retailers, and banks. So primarily, any organization that's having daily contact with outside individuals in the community, there are a plethora of lawsuits that are being filed. We're also seeing a number of false advertising lawsuits being filed for improper claims being made about personal protection equipment, hand sanitizers, and masks. Those, as of last week, we had observed 4 of those being filed, and we expect that there will be more. You only have to go on the internet right now, and you can see that there are a lot of individuals and companies that are selling products that don't have the proper certifications, or that are making representations about the effectiveness of their product that have no basis in fact, and are going to precipitate lawsuits if people decide to challenge them on the advertising that they're making with respect to the effectiveness of their products in dealing with the COVID-19. Key things to remember about commercial general liability policies under COVID-19: timely notice of the occurrence or of a potential claim, no different than with your D&O, except that commercial general liability policies are typically not claims-made policies; they're occurrence-based. And so it's when you have notice of the occurrence, which is typically when you get the letter from the attorney, or you get the letter from the individual who claims that he or she has been harmed. Then you have notice of an occurrence that you should submit to your insurance company. Or if you hear about it but you have not been put on official notice, you can provide them a notice of potential claim, and that'll avoid any kind of late notice type situations. With respect to commercial general liability policies, you need to be very careful to see whether or not they contain any type of pandemic exclusion, or if they have a virus or bacteria exclusion. I did a review last week and noticed that there were about 7 or 8 different type of forms that insurers were using with respect to exclusions for mold, fungus, bacteria, viruses, and pandemics. Some of those were born out of the mold cases that came out of the construction industry about a decade ago. Other ones were generated out of the SARS epidemic that occurred back in 2003, 2004, and started showing up on policies in 2006. It's critical to look at the policy to see whether or not you have such an exclusion of the policy and whether or not it's one that's applicable. I have seen a couple of letters from insurers, citing to an exclusion for example, mold, and contending that that was, an applicable exclusion with respect to a COVID-19 type claim. I would take the position that that's not effective, that it needs to be either a specific virus exclusion or a pandemic exclusion, that COVID-19 is not a bacteria, nor is it mold. Other things that you're going to want to check is that in addition to your insurance policy in which you're named insured, you're going to want to check whether or not you're an additional insured on anyone else's policy. This could be applicable, whether or not you're a retailer, whether or not you're a vendor. If you've got people downstream of you that required you to, or you require them to have you put on their policy, you're going to want to check to see whether or not that provides you coverage, or if not sole coverage, at a minimum additional coverage for a COVID-19 type claim. So if in fact you believe that you are an additional insured on someone else's policy, you ought to make a request for a copy of that policy and see what scope of coverage it might provide to you. And just like as Sean pointed out, if you do have a third-party insurance claim of commercial general liability, you're going to want to document any alleged exposure and contamination and be able to successfully defend the claim, going forward. Make sure you keep all your documents, do your investigation, and get your insured, involved as early as possible. Finally, for those of you that have a European exposure and have been involved with the European policies, particularly in the London market insurers or for the other European insurers, there are policies out there that provide coverage for communicable diseases and or for pandemics. I have reviewed over the last couple of weeks about a half a dozen of those types of policies. The good news is that they do provide coverage for exactly a COVID-19 type situation. The ones that I have reviewed, the bad news is that they typically have a sublimit that is substantially less than the otherwise applicable limits on the policy for a broader array of potential identification or liability type issues. The other thing that I have noticed is that in most of the policies coming out of the London market, at least, they require for coverage that the alleged contamination at the business be actual, not just suspected. And so what that means is that in order to be able to get coverage, at least under the current interpretation of these policies, you're going to have to be able to show that at your business that you had, actual contamination, as opposed to, thinking that you might. There are a number of ways that you can do that. There are experts out there that can come in there and can, take samples to basically meet your burden of proof to show that there's contamination. I know that some other people that had those type of policies, they had several individuals who turned out to have COVID-19, and as a result, they went in there and apparently did some testing of their workspaces and found that in fact there was contamination on the property, such that they could meet their burden of proof. So that's something to bear in mind with respect to anybody that happens to have that type of policy. So now I'll turn it back over to Sean, who's going to talk about the pending legislation, which, in the first instance is, potentially going to affect the first party coverage and some of the methods that may be employed in the future to get coverage for business interruption and extra expense. Sean? Thanks,
Chris. Yeah, and I just want to cover this briefly because, as many of you know, the proposed legislation that's been introduced in what now I've got 8 states, and this is changing daily, where bills have been introduced to essentially rewrite commercial property policies in those states to force insurers in those states to cover COVID-19 related losses. And like Chris mentioned, we're talking about, business interruption losses as a result of the pandemic. I'm going to talk in broad strokes generally about what the goal of most of these bills, what the goals of these bills are. There are some differences, and I'll mention a few of those, but they're not exactly the same. But the goal generally of the bills that have been introduced in these states is to add COVID-19 as a covered peril under any policy issued in those states containing business interruption coverage. And that's probably the simplest way to put it. Therefore, any business losses by policyholders with that coverage in those states as a result of COVID-19 would be covered losses, regardless of the terms of the policy. So all that stuff we just talked about, you essentially would throw it out the window. As long as you're a policyholder with a policy that has this kind of coverage, you're in business under most of these bills. They would essentially be an override of the actual policy language. In terms of timing, some of the states, some of the bills are effective immediately on passage. For example, the language of Ohio's proposed bill, it would be effective from the date of Governor Mike DeWine's first stay-at-home order until that, it will happen someday, but until it expires. So that would be the effective time period. But for example, New Jersey and New York, who I believe were two of the first states to introduce bills in their legislatures, the way those bills read is that they'd be retroactive from early March. And we'll talk more about retroactiveness in a minute. Most of the bills either have no provisions with respect to funding, or the vast majority are funded via an industry assessment. Based on my research, it looks like Louisiana and Michigan and Pennsylvania don't really discuss how they're going to fund the legislation, but the rest of the states purport to fund the legislation via an industry assessment, where every company that writes commercial insurance in these states would be assessed money to pay COVID-19 claims. And that assessment would be distributed in proportion to the written premiums received by those insurers in the state in which they operate during the preceding calendar year. So essentially in proportion to the premiums written. States essentially would be using the insurance carriers as third-party administrators to pay these claims up front. And then, at least with respect to Ohio and I think the other states that have purported this funding mechanism, would then submit that information to the state, and eventually, this is kind of one of the key issues, hopefully be reimbursed by the government for those payments. Most of the bills only apply to small businesses. So you're looking at situations where 100 employees or less is the number that we're seeing. New York, I think, was 250 employees or less, but for the most part, you're talking about smaller businesses. They also, in terms of payment limits, most of the bills that have been introduced would be subject to whatever the policy limits are under the particular policyholder's policy. So there are a few that don't have any payment limits. Indeed, Louisiana's bill that's been introduced doesn't discuss it. But the vast majority of the bills would be the greatest limit affordable under the particular policy. Obviously, the passage of any of these bills is still very much up in the air, and even if any of them are ultimately passed, there are going to be constitutional challenges, lawsuits filed by the insurance industry, especially with respect to any retroactive legislation. And the arguments are relatively clear. In terms of trying to force insurance carriers to pay for something that they arguably never agreed to pay for, and certainly anything that would be retroactive presents its own unique set of challenges. The sort of one of the underlying issues also is the funding and the underwriting issues associated with forcing insurance companies to pay these claims. We're looking at maybe $850 or to $1 trillion in losses with respect to these business interruption claims over the first few months. and that number, at least the estimates, would exceed the reserves they actually have set aside to pay for these claims. So you're talking about running insurance carriers out of business. As a result, not surprisingly, we're seeing that the insurance industry is lobbying Washington, D.C., the federal government, to fund the payment of these COVID-19 claims. And a Pandemic Risk Insurance Act has been circulated in Congress, and at least the initial drafts of this act that would create a federal reinsurance program for pandemics, very similar to what we saw after 9/11 with the Terrorism Risk Insurance Act. As of right now, participation by insurers in that program would be voluntary, and participating insurers would be required, if they participated, to offer pandemic coverage in all business interruption policies. And there are already, if you read some of the articles that have been published about this, there are certainly issues with respect to how insurance carriers would price this kind of coverage, because it's so unpredictable. So there are a lot of issues that would need to be ironed out. And so the implementation details are obviously still very murky. But one of the issues and I think one of the reasons why the insurance industry is interested in maybe some sort of overarching legislation to deal with these issues is the fact that, nobody wants to die a death by 1,000 cuts or 1,000,000 cuts. So a piece of federal legislation that would presumably or possibly preempt some of the current litigation and some of the state legislation that I just discussed, that would cap carriers' exposure, might be attractive to some insurance companies, as opposed to not really knowing what the playing field's going to look like. So there's still obviously a lot that has to be ironed out there. I would say that one of the key takeaways from a policyholder standpoint here is we don't know what this is going to look like 6 months to a year from now. So, especially if you're in one of these states, that's listed on the screen, you should really consider, if you have COVID-19 related losses, you should really probably be considering filing a claim. And with that, since we're running short on time, I'm going to turn it back over to Chris to talk a little bit about an overview of some of the litigation, especially with respect to some of the first-party insurance issues, since he already discussed some of the litigation associated with the third-party insurance.
So in the few minutes that we've got left here, I just want to give you an overview of where things stand in terms of pending litigation. As Sean noted, the lion's share of the litigation currently pending in the United States involves first-party business interruption and extra expense. And it started actually with a lawsuit that you might have read about down in Louisiana involving a well-known restaurant that contended it had to shut down because of contamination at the restaurant from COVID-19. They happened to have a London market policy that did not have a pandemic or virus exclusion on it, and they were alleging that it was going to take, somewhere between 14 and 28 days to decontaminate the restaurant, and that under their London market policy, because it didn't have a virus or pandemic exclusion on it, they were entitled to business interruption as well as extra expense. Based upon that lawsuit, when first filed, it then spread out to California, where a number of restaurants basically took the same position as the restaurant down in Louisiana, and expanded it to restaurant chains, also citing to their policies not having virus exclusions or pandemic exclusions, and contending that they also had COVID-19 contamination. And really, after about the first 2 weeks of these lawsuits being available, we saw a widespread influx of lawsuits throughout the country making similar allegations. In Illinois, expanded not only to restaurants, but also to other places of entertainment. It's now in Pennsylvania and Ohio. And I took an account as of last Friday of the number of lawsuits currently pending. And by my count, there were at least 65, all of which are contending in one way or another that they're entitled to business interruption and extra expense because either the particular definition of property damage in their policy falls within the parameters of a COVID-19 set of circumstances, or contending that they have actual contamination, and therefore it's no different than a building that's contaminated with an asbestos fiber, or a building that is infected with some type of chlorine gas, all of which courts have said in other cases constitutes property damages for purposes of business interruption and extra expense. In addition, there are a number of jurisdictions in the United States where policies are interpreted, based upon the reasonable expectations of the insured when they procured the policy. And I've seen in some of the lawsuits that have been filed, people making those contentions with respect to the fact that they reasonably anticipated that in this type of a scenario where they had to shut down their business because of, for example, a civil authority order that they were going to be entitled to coverage, and never envisioned that they'd be faced with an insurer denying coverage because there was no direct physical damage, as the insurer contends is required in order to trigger the coverage under their policy. The only case that I know that might touch on the civil authorities type situation that really doesn't deal with insurance but does deal with the civil authority aspect of it is a case that came out just last Friday from the Pennsylvania Supreme Court, captioned Friends of Danny DeVito versus Wolf. The issue before the court on an emergency motion was whether or not the governor's order to shut down business was lawful. And the Pennsylvania Supreme Court stated that, quote, COVID-19 pandemic is, by all definitions, a natural disaster and a catastrophe of massive proportions, not unlike fire and flood, and therefore the governor could lawfully shutter properties absent confirmed contamination because there was significant risk of the spread of the coronavirus, even at locations where contamination had not yet been confirmed. I would suggest to everyone that if in fact that standard that's going to be applied to some of the insurance policies that we have reviewed, that there will be an expanded scope of coverage that will be available to insureds. So as we told you at the beginning of the presentation, it's critical to two things. One is have a full understanding of what the terms and conditions of your policy are, and keep fully informed of daily developments in the area of COVID-19 insurance, both on the first party and third party aspect, because literally it's changing daily, and claims that potentially are not covered today may well be covered tomorrow, either as a result of legislature or as a result of cases that have yet to be decided. So Sean, I'll let you wrap it up for us.
Okay, thanks, Chris. And I'm not seeing any questions, and we're running out of time. So if anyone does have any questions, I got too far ahead. Please feel free to reach out to either Chris or me directly, and our contact information is on the screen. As we wrap up today, if you're seeking CLE for today's program, the tracking code is capital T, as in Thompson, capital H as in Hine, H-I-N-E, 0505. Again, the tracking code is TH0505. Again, if you have any additional questions, feel free to reach out to us. And we hope you can join us for our next webinar, which will be on May 12th, as I mentioned earlier, and cover force majeure contractual issues. And if you are not currently receiving our updates, our Thompson Hine updates and invitations, we would invite you to go to the Thompson Hine website and register to receive our mailings under the Publications tab. Thank you all for your interest in attending today's webinar. Enjoy the rest of your day and stay well.